Finally, the RobinHood IPO. Seems like the only thing that's taken longer than RobinHood to IPO is Virgin Galactic to actually fly a paying customer into outer space. The investing world has been craving to get a piece of RobinHood, and with good reason. My bet is that it will be the most talked about stock for the next year. Just like it's already been the most talked about going public soon company for the last 3 years. In this video, I'll show you what filter I'm using to determine RobinHood's future successes. And I'll tell you why the price action on this is going to be very bullish from day one. Does your mail lady know about RobinHood? Mine does. She's a great person and I bounce ideas off her all the time. I call it the postal service filter, and I've mentioned it in other videos. If my mail lady knows about a financial topic, then odds are everybody in the investing world knows about it too. And my mail lady loves her RobinHood. That's important because RobinHood needs people like her if they want to keep earning revenue, and here's why. RobinHood told us this week that they have 18 million user accounts and some 81 billion, that's with a B, in assets under custody. For comparison, some of the big boys in this space have several trillion, and that's with a T in AUC. It's not apples to apples because of 401ks and other things that RobinHood doesn't cater to. But it doesn't change that RobinHood makes money when those 18 million users, including my mail lady, do one of three things. Either they pay for RobinHood Gold each month, they pay interest on margin loans, or they trade securities so that RobinHood can profit from the payment for order flow shenanigans. The more retail users RobinHood has doing each of these three things, the more revenue the company generates. Simple, but not easy. Because as you probably know, RobinHood's public image is like a pancake mix. It is battered. We don't have time to go through everything this company has done wrong in the last 2 years because there's a brand new bad news to discuss every single day. On June 30th, for example, just 1 day before their S1 was made public, the government hit RobinHood with a $70 million fine. Ouch. Then a day later, buried deep in the S1, RobinHood used just one single sentence to tell us that the U.S. Attorney's Office seized the CEO's cell phone as part of the GameStop investigation. Ouch, times two. This company is a magnet for bad news and bad publicity. Funny thing about magnets, they tend to not have off switches. So back to my mail lady. She's already a RobinHood user, and RobinHood is generating revenue from her in those three ways we discussed. And we said they had 18 million accounts, right? Well, are those customers happy? To answer that, let's look at the monthly active users, or MAU. There are 300,000 less MAUs than there are accounts. So what's up with that? Who are these 300,000 people not logging into RobinHood? Remember, RobinHood gained popularity and grew its user base by making it free to trade. In other words, free to be active in the market. And you've probably heard about the gamification of investing. Those criticisms? Look, RobinHood got where it is today by rewarding people for interacting with the app. And that interaction just happens to be buying and selling securities. My opinion is that people who are not monthly active users are people who have left the platform entirely. That could be a problem. That is the problem. And like I teased at the beginning of this video, that's the only metric that matters. So here's why, and here's where it gets even worse. Look at how RobinHood is defining monthly active users in their S1. It's a user that makes a debit card transaction, moves between two screens in the app, or loads a web page on a computer browser. What? Users don't even need to have money in their account to be considered active? Let me tell you why this is a sham. I have a RobinHood account. I don't use it anymore because of the constant outages on volatile trading days. And they don't even have a customer support phone number for me to scream about the outages. You could have $1 million in there And the best you get for tech support is an email address and a several-hour wait. Anyway, I didn't delete my Robinhood account. I just have no money in there and no reason to log in. But this spring, when it was tax time, I did log into Robinhood to get my tax documents. To do so required me to move between two different screens within the app. So I'm now a monthly active user. In fact, just to get this screenshot of my account at 0 means I'm active user for all of July. So 300,000 people, or 1.6% of total accounts, have given up on the platform entirely. And we have no idea how many of those counts are like me, who have walked away from Robinhood but are being counted as MAU because of the reporting criteria. Robinhood going public is like the Titanic before its maiden voyage. Everybody knows what it is, and it's making headlines around the world. It's an improvement over all its predecessors, and on and on. That's Robinhood. And the inactive accounts on the platform represent people in the lifeboats trying to escape the sinking ship. I'm there in the lifeboat, and at least 300,000 others are there with me. And as those lifeboats become more and more full, investors should ask themselves, is the Robinhood ship getting closer to sinking? If you want to buy and hold shares of Robinhood once it's public, keep an eye on how full those lifeboats are getting. Keep an eye on that delta between total accounts and monthly active users. That represents, in my opinion, whether this constant bad press and the outages and the poor customer service are eating into Robinhood's ability to generate revenue. For me, the delta between the total accounts and the MAU is the telling figure, and it might make sense to 2x or 3x whatever that number is, given how many people Robinhood wrongly labels as an MAU. Because I am not an active user for sure, but they're counting me as one. And the Titanic analogy is just that, an analogy. I would bet Robinhood stays afloat for several decades. But I wouldn't be surprised if they drove themselves right into an iceberg that they should have seen coming. So look, Robinhood changed investing in 3 straightforward ways. No commissions on trades, with an easy-to-use, welcoming interface, and built for the smartphone ecosystem. It can't be overstated how much Robinhood changed investing for the better. Not only with their platform, but by forcing all the other brokers to either catch up or cash out. As for buying Robinhood stock, I'll wait to see what the multiples are once the shares start trading. I have a feeling this thing will be way outside comfortable PE ratios. But guess who will be buying it no matter what? Well, for one, I bet almost every Robinhood user buys shares. And every growth fund, software ETF, tech ETF, 3 Cathie Wood ETFs, the IPO ETF, oh yeah, and my mail lady. There is going to be huge demand, and the buying won't be attached to fundamentals. It will be attached to momentum and hype, and funds buying it because they have to. So move cautiously into this one if you want in early. I personally will be waiting in the lifeboat. Thanks for watching, and I'll see you on the next one. The stock will probably explode when it first lists. I don't know about its longevity. Hey, normally I'm cool hopping on a momentum trade. I bought Coinbase shortly after listing, right before crypto markets, and that stock crapped out. Anyway, let me know how you're viewing the Robinhood IPO.